All right, are we seeing the right screen?
Yes.
Okay, great. Yay. It's usually half the challenge. Well, good morning, everyone. Good afternoon, depending on where you're at. I am in Mesa, Arizona, so we are still morning. We're going to, Mike Tarenti with Royal Neighbors of America. Definitely glad to be here today. So thank you for the invite. And we're going to look at our, first and foremost, our insured legacy, our final expense product, and then we'll also dive into our Jet Term, Jet Whole Life, and soon to be Jet SPWL product. So Royal Neighbors, we were founded in 1895 by 9 visionary women in Council Bluffs, Iowa. They formed the foundation of what we know as Royal Neighbors today. So we are actually just celebrated. I know this slide says 129 years. Last week was our 130th anniversary. So definitely glad to be celebrating our 130th anniversary. So back in a time where you couldn't own property, couldn't vote, and had very few educational opportunities, these women formed the foundation of what we know as Royal Neighbors today. As a fraternal benefit society, we're different than other carriers that you may be working with, as our mission is basically supporting women and serving communities. So we have over 265,000 members nationwide. We're made up of a chapter network, which gives us an opportunity to volunteer in our local communities and give back in those local communities. And our social good, it's all about giving back. The picture down in the bottom left-hand corner, that stunning gentleman there, yes, yours truly, was at a check presentation where we awarded a $10,000 grant as part of our Nation of Neighbors program. And this was for an organization in North Carolina. And the great thing about them is Operation Christmas Blessing is the big event that we had sponsored. And they take members of the local community, families that are having a tough time in the local community, and adopt them. And these families give a list of wants and a list of needs. So we go shopping for their list of needs without them. And then the list of wants, they come, excuse me, take those back, reverse it. So we do their wants without them. We take their needs and have them come in and shop with us so that we can get the right sizes and everything, and get those items that they're looking for. So then after that, they wrap the gifts up, give those to the family so that they can have Christmas gifts under the tree. And really, it's so touching, because these members, then it's a ripple effect. These members that go through the process this year will become part of the organization next year, and they will volunteer in the local community and give back again for those next round of families that are going through the process. So our insured legacy final expense product, as with all of our products, we are currently in 44 states along with the District of Columbia. So the Alabama, Louisiana, we are still not in. New Hampshire, New York, Massachusetts, and then Alaska and Hawaii are the states or territories that we're not currently writing in. With our ELFI, or our insured legacy final expense, we wanted to roll out a product where we can make an offer to every customer that comes through the door. The great thing about this is we also added some fantastic riders, and we'll get into those as well. So it does have 4 rate classes in one e-application. For the first time ever, we are asking height and weight. Okay. This is only to qualify for the preferred rate class. And as we'll see after a bit here, it's a very liberal height weight chart, even for the preferred. The preferred does start at age 50, goes up to 75. 25,000 is the minimum with that product, and a maximum of 40,000. Our standard simplified issue whole life is 50 to 85. We go from 5,000 to 40,000. As you can see, for the preferred, the standard, and the graded products, accidental death, grandchild rider, charitable giving, and accelerated death benefit riders are available across the board. If they don't qualify for the standard, we do offer a graded death benefit product. And this is great in the fact it's 30, 70, 100% of the face amount. So 30% if death occurs in the first year, 70 if it's in the second year, 100% in years 3 and on, or in case of accidental death. For those that don't qualify for any of those three, we do offer a guaranteed issue. Minimum on that, it starts at 3,000 and goes up to 10,000. And this is 110% of the premiums paid in years 1 and 2, and then 100% of the face value in years 3 and on. The only rider that we don't have available is going to be your accelerated death benefit rider, because the criteria for accelerated death benefit is life expectancy 12 months or less, and many conditions that fall into the guaranteed issue would obviously qualify for that. So looking at the riders, the accidental death is available from issue ages 50 to 70. 5,000 is the minimum on the three classes, and then 3,000 for the guaranteed issue, because that's the minimum on the product. The grandchild rider is available from 50 to 85. This is $5,000 of coverage for all children, ages 90 days old up to age 17. If they're a full-time student, we'll carry that out to 25. There are conversion options available for the grandchild rider, and both of those riders are available only at issue. Your charitable giving rider, this is a free rider. There is no cost to the client. We will give an additional 1% of the death benefit, up to a maximum of $1,000 to a qualified 501c3. So whether it's the American Heart Association, the ASPCA, we've got a list of charities that they can elect at the time of application. So we're still going to pay out the full death benefit, but an additional 1% is designated by that individual to give back to one of the organizations. And then the accelerated death benefit, up to 75% of the death benefit will be paid out, and that's available from 50 to 80, all products except for the guaranteed issue. Life expectancy 12 months or less, or permanent confinement into a nursing home. So underwriting, what's great about this is we're going to ask reflexive questions. So if there's a yes answer to a question that's not necessarily a knockout, it's actually going to drill it down and get more information. We're going to use the RX database in order to correlate the answers to the medical questions and the prescriptions. And again, if there's questions on it, it's going to be reflexive and go back and re-ask those questions. Again, no height, weight. So you can have your under tall clients, your Bobs, your big old boys, 5'8" and 600 pounds. If they can answer no to all the health questions, they can still qualify. I know a lot of other carriers are going to have a height weight chart for their final expense product. We do not. Here's your build chart, and you can take a look. At 6 foot 289 is going to be the maximum for a preferred rate class. That's still pretty liberal, especially when it comes to a final expense product. Now, recent changes with the launch of this product, we still take diabetic neuropathy, provided they are not on insulin. Okay, so metformin and diabetic neuropathy can still qualify for your standard rate class. We got rid of the mobilization. So if they're only using a wheelchair or a scooter due to injury or accident, they can still qualify for the standard rate class. Another one is going to be COPD. If they're non-tobacco and they have COPD, they can still qualify for a standard rate class. So those are positive enhancements that we did make with this product. So when we rolled this out, and I apologize because the rates have changed. If we look at Ascendo and Foresters or Liberty Bankers, we took a 65-year-old male in the preferred rate class. And unfortunately, the rates actually were just lowered. So this may not be the most accurate chart, but we came in above Foresters, LBL, Trans, United Home Life, and Corebridge. So again, very competitive product on the rate for the final expense product. So if you're looking to quote, we have multiple ways in order to quote the product. You can quote through your agent portal under the quoting and illustration tools. The quick quote is available there. You can also download your mobile calculator, and that's going to be a plus so you can put that on your phone. You can go straight to the website, www.rnaquickquote.org, and use that as well. So with the mobile tool, your agent access is available through the Google Play Store or through the Apple Store as well. What's nice about this is you can actually add the writers to the quoting tool. You can email a quote direct to your client. And again, if you need the QR code, that should take you exactly where you need to go in order to download the mobile app. We do have a full digital toolkit available on the agent portal. After you log in, on the left-hand side, the Insured Legacy resources. What's great about that is you can go and there is a sandbox. So you can enter the fictitious client information and just work through the application to see how things work prior to having your appointment with the client. So 3 ways to write the product. eApp is my favorite because that can be done either in person or it can be done remotely. You can do everything electronically there. If you want, you can do a 3-way call and get that point of sale decision. Or if you really want, you can do a paper application and obtain a wet signature. Now, the eApp and the phone app in Connecticut are not available. So if you're writing in Connecticut, that does have to be a paper application. So the signatures, everything, if you're physically with that person, you're going to click on the in-person button. If you are not in the same location, you're going to select the remote button. So as far as what's supported and what's not, laptops, desktops, tablets, the only thing that you cannot do is going to be, excuse me, the Amazon Kindle and Fire tablets are not supported. You're going to use Chrome, Edge, Safari, or Firefox since IE is no longer supported as well. So again, with those reflexive medical questions, a no answer is not necessarily, or excuse me, a yes answer is not necessarily going to DQ. We do have the signature process, which is unique for each individual. So the agent will sign, the client will sign. All the replacement forms are built in and are electronic. And then your payment features, if your client is on Social Security and their check's coming in the first or the third or any of the Wednesdays, you can actually select that on the application and tie that directly to when that deposit is being made, and we will draft at that same time. If there's anything that changes and there's a ANS needed, those can be done electronically. And then you can also apply for multiple products at the same time. So if you're doing a paper application, you can scan that in and send it through our secure email. You can also use the mobile app and take pictures of it. It does not save it on the phone. It will submit it electronically through the app loader process. You can also fax the applications direct over to our new business team. Or a case of the paper app, if you really want, you can snail mail it. So taking a look at the JET products, for the healthier clients or the younger clients, we do offer both a JET term product and a JET whole life. The 15, 20, and 30-year term products are available. Issue ages on the term start at age 18. We go up to 65 on the 15-year product, up to age 60 on the 20-year, and then up to age 50 on the 30-year. Our term does start at 50,000. We do have accelerated underwriting available. We go up to age 50, up to 500,000 without a paramed exam requirement, and up to age 60, up to 250,000 without a paramed. That product is fully convertible to a whole life plan as well. The JET whole life is available in both a level pay option and a 20 pay feature. We start at ages 18 there and go up to 80 for the level pay, up to age 65 for a 20 pay. We do offer a youth product for the children that goes down to 10,000 for a minimum and goes up to 49,999 for the maximum. On both of the products, we offer critical illness, chronic, and terminal illness riders. So on the critical illness, we will advance up to 25% of the death benefit or a maximum of 100,000. The chronic illness, this is mirror your long-term care definition, so 2 of 6 ADLs or need for supervision due to cognitive impairment will advance up to 80% of the death benefit or a maximum of 400,000. What's nice about this is that it's actually going to limit the amount that we can max, so it's not going to exceed the per diem limit set by the government, so that there's no taxable event. Since this is an advancement of a death benefit, we do not want the client incurring a taxable event. Your terminal illness, 90% of the death benefit, maximum of 450,000. That's going to be life expectancy of 12 months or less. And again, that's available on the Jet Term and the Jet Whole Life. Additionally, accidental death is available, cancer waiver or premium, child term rider, similar to the grandchild rider, $5,000 of coverage, $5.22 is the modal premium, covers all children from one child up to maximum. I mean, there is no maximum. So if they've got 11 kids, that'll cover all 11 kids. Waiver of premium is available, FPDA, a flexible premium deferred annuity rider. And then my favorite for a child policy is the guaranteed insurability rider. We always want to make sure with the kids, if we've got taken out coverage on a child, that we add GIR so that if there something should occur and their insurability changes at a later date, they do have the ability to take out additional coverage without having to prove insurability. Here's the chart again, up to age 50, up to 500,000 accelerated underwriting, up to age 60, up to 250,000 accelerated underwriting. Anybody over age 60 will go through traditional underwriting, or 500,000 and above will go through traditional underwriting as well. So if you're unsure if your customer is going to qualify, you can go ahead and call into us for a risk assessment and make sure you're getting their age, their height, weight, their meds, any conditions. And then if they do have any major MVR issues. So if you've got this, go ahead, give us a call, run it by the underwriter, get a risk assessment done prior to submitting. There are no knockout medications, so we don't have a list that you can verify with, but you can call into the underwriter, especially if you're not familiar. And then again, don't have the customer on the line when you're calling in, just in case the decision would be upsetting to the customer. On the youth applications, height and weight would be important, and date measurements. We actually have seen children that are underweight try to apply and get declined. So you want to make sure that if there's anything there, again, you get that information and get a risk assessment done. So anybody that's not eligible to apply, you have to be a U.S. citizen or a legal resident, so they've got to have a Social Security number. If they've got a history of felony charges or any pending charges, they're not going to qualify. And then anyone currently in bankruptcy, living in a nursing home, assisted living, etc., or third-party owners not related to the applicant are not going to be eligible. Now, on the whole life single premium product, and this is going to change later later this month. We're actually moving from a paper application yay, to a new e-app. So the current product, if you're writing a single premium, ages 45 to 80, 5,000 is the minimum premium required, 200,000 is the maximum without prior home office approval. This is available, again, male and female rates, tobacco, non-tobacco. The standard risk class actually goes to a table 4, and then we do offer a substandard risk class available from tables 5 to 8. ALB, or excuse me, Accelerated Living Benefit Rider, critical, chronic, and terminal illness are also available on the SPWL product. This is great. 1035 exchanges. Have you come across old cash value plans that they're still paying into, and they no longer, want to pay into a plan, and they've got that cash value, you can 1035 exchange into a single premium product, have a fully paid up plan, and with no further premiums for the client. It's also great if it's idle leave behind money. So if they just have money that's sitting in a CD that's coming due, this is a great opportunity for them to take those funds and purchase a single premium product. Again, this is a fully underwritten product, so it does still not take all the conditions that the simplified issue product would. And then our sales support team is available Monday through Friday from 8 to 5 Central Time. If you do have any questions on any of the products that come up, if you need help getting into the agent portal, you need help going through an e-app, ordering supplies, anything that you need, our sales support team is here for you. So we're going to go ahead and open it up and see if we've got any questions.
I have one on the children's writers. Are they doing any kind of medical underwriting on them?
No, no, they are not.
So they would take like an autistic child?
Mm-mm.
Okay.
Autism actually as a separate note, depending on the severity and where they're at on the spectrum, they may still qualify for the Youth Essential Whole Life. So that would be obviously a risk assessment done prior to that.
What about a child who might be type 1? Would they take that?
On a rider, they will not take it as a standalone. Yeah, no medical questions are asked for the rider or the grandchild rider. And again, those riders are fully convertible.
And you said that that guaranteed insurability rider needed to be on their personal policy if it was a children's policy,
If the,
or if it was as a rider, as a rider.
no, if they have a standalone Youth Essential Whole Life plan, I highly recommend putting a guaranteed insurability rider on.
But if they
It
are
does not
insurable
have to
when
be.
they get, but if they're
Right.
insurable when they got approved, wouldn't their, and it's beyond the 2 years, wouldn't their policy still pay out? How would that
Yes,
benefit them?
that plan was, but if they took out a $10,000 plan and then later on down the line, they're older and they're
Oh,
needing
they
more
want more.
coverage and their
Gotcha.
insurability had changed, they unfortunately, it kind of limits them on what they can do for future coverage. I had a good
Gotcha. And
buddy
it,
of mine. Yeah, I had a good buddy of mine. His kids developed type 1 diabetes. And so they were uninsurable, but he had taken out coverage, put the guaranteed insurability rider on there. So then they had coverage later on and the
and
opportunity to purchase more.
is that rider on there for the life of that policy? Because I know I've seen some guaranteed insurability riders, they fall off or they expire after so many years.
They'll have specific dates that they can go 18, 21, 25, birth of a child, marriage,
Okay.
things like that, where they can elect it. But eventually it will fall off if
Okay.
they don't exercise those rights.
Okay.
I think ours goes up to age 40, if I remember right, as far as the last time that they can elect.
Okay. That's actually good. I think that's the highest I've seen it.
I think there's like 7 conditions, right? Like you said,
Mm,
birth of a child, marriage.
right.
There's a handful of scenarios that give them that opportunity. For
So I
any of you
always
selling
recommend
it,
putting it on there.
yeah, I tell you, and this isn't even where you ask the client. This is where, your expertise and understanding, that you're telling them, hey, you're adding this or you're putting this on it because they can't imagine their kids dying. They can't imagine that. And that's an emotional decision. I had the same thing, Mike, where a client refused to let me put the child rider for 313 a month. And their middle child became an insulin dependent diabetic where they had to have the insulin pump
Mhm.
and uninsurable for life. And they could have gotten up to 25,000 when they were 21 guaranteed. And we just put that one thing on. So you kind of it's so negligible, the price. And what you do, it says it just guarantees them the ability to always have insurance, no matter whatever happened in their life when they become an adult. I would encourage you guys to do that. And then on a child rider, same thing.
One other quick question, Mike, is, you said it's convertible. So, I've had several clients who ask me, is it better to have them as a rider? Because I know it's a little bit cheaper versus having a standalone. And, and the parent dies. How long do they have? What is that process? I've never gone through it, so I don't know how to explain that to a client.
If the parent dies and the rider's on there, that will be an opportunity to convert at that time, because that
Okay.
basically that coverage will cease once that certificate is no longer, once that coverage is no longer in force.
Okay.
So yes,
Do they
first,
have like 30 days, 60 days to convert that to their
I
own
believe it's
policy?
90. I believe
Okay.
it's 90. I'm not 100% sure, but I believe it's 90. If you can write a standalone, write a standalone.
Yeah, I'd
But
much rather do a standalone.
mhm. It's just an opportunity. Like I call it the Inez rider. Inez was my mother-in-law, and she had 11 children. She would have loved that rider. Every kid of hers, all 11 of them, $5.22 a month gets $5,000 of coverage. That's the advantage of riding it with a rider, is multiple children are covered. Or if they're uninsurable, they're covered.
Hey, Michael, can you talk about like give everyone a couple sweet spots? Like, hey, if you're dealing with XYZ client, this is something to really think about. Just a couple real good go-tos.
Sure, especially on the final expense. The ones I refer to are the Bobs, the big old boys, the overweight clients or the under tall clients. They answer no to the medical questions. They're still going to get day one coverage with us on the simplified issue plan. The diabetics, we still take a lot of diabetics and conditions, again, without insulin. The insulin dependency and neuropathy, that mortality on that block is so high that's why we had to drop off the insulin coverage. But those are going to be the two. Um, let's go back. I'm going to pull that slide real quick. Sorry, it's going to take me a second to get back there.
I have done a risk assessment and I have been told that if a client has 2 or more medications, do not submit them on your JET products. They won't qualify or they'll get declined or whatever.
It all depends on what the meds are. I mean, they can have cholesterol, they can have high blood pressure if that's being treated, and they can have a anti-inflammatory, and that's not going to knock them out.
Okay.
Yeah, I would
Yeah, that makes
definitely. That's
sense.
why
They
you want to
have
get
to be
the
super
meds.
healthy.
No, not super
Okay.
healthy. I mean, we'll still we still take some conditions if they're on some meds, And what's great about the term product as well is that's fully convertible at your initial risk class at attained age. For me, almost 6 years ago, I had a brain aneurysm, so that obviously shot my insurability all to heck. Prior to that, I had taken out and I was issued at preferred, so I can still I can convert my plan from my term plan to a whole life at preferred rates. So looking at the biggest ones again, cancer, this changes as well. So your cancer, um, if the treatment was more than 5 years ago, and it's a 5 year on our cancer. I was talking to some other carriers this weekend. I know there are still some that are out there at 7 years or 10 years. So anything over for cancer at 5 years, definitely take a look at it. Anxiety is they can even qualify for preferred rates with anxiety. Here's your hypertension, so that's not a big deal. MS for us can be a standard. So there are still quite a few conditions that we do take that other carriers are not, but the height, weight, and the diabetes are going to be really sweet spots for us. Any other questions today?
Speak now or forever hold your peace, guys. This is your best resource. They do come up in the insurance toolkit too, so when you're quoting, you can see them on there as well.
That's awesome. One other one that
Good
you're going to come
stuff.
across is going to be a TIA. If the TIA or the stroke is over a year ago, you can still qualify for standard.
And standard is immediate issue, so that's important
Correct.
to remember.
Mhm.
Awesome. Thanks, Mike.
Yeah.
Certainly. Well, I appreciate the opportunity to be on the call today. If there's anything that does pop, don't hesitate to reach out to me or reach out to our sales support team. And by all means, use our risk assessment teams, both for the fully underwritten products and for the simplified issue product.
Yeah. We
And download that app.
Yes, it's great. I've got it on my phone. Again, that's Agent Access, and that's available through the iTunes, through the Apple Store or Google Play Store. You can search Royal Neighbors or you can search Agent Access.
Oh, Mike, say hello to Don for me. And
I will definitely do that.
I gotta catch up. What a talent. You've heard him sing and everything, right?
Yes, I have. Yes, I have.
Yeah. Yeah, the good old days.
Well,
Sounds
again,
good.
thank you everyone for having me on today, and I hope you all have a wonderful day.
Yeah, you as well. Thanks, Mike. I'm adding all
Thank
my
you.
slides to the training portal, guys, so you can find if you didn't catch them. I'll have them up there shortly.
Wonderful. Take care.
All right. Anybody else have any other questions for this week?
All right, go out and write some Royal Neighbors.
That's right. Read a lot of Royal Neighbors. Remember, if you're at conference, it's double production points all this month. So I don't know about you, but I want to go to Haiti. So, or Tahiti.
Tahiti.
Tahiti. I don't know why I said Haiti.
It's got
I don't
an
want to go to
island.
Haiti.
It's an island.
I don't want to go there, actually. I want to go to mainly Bora Bora. So, like, the boat can just drop me off there and just pick me back up from Bora on the way back.
There you go.
Anything else for me as well this week, guys? Otherwise, I'm gonna let you jump back into it.
Take care.
All right. All right. Bye, guys. Go after it.